I make these videos for one purpose. I make these videos so that you can make money. I show you exactly how I chart certain stocks. I explain the psychology behind looking at those stocks and how both of us are going to make money and profit from them. So I picked a few stocks today. Let's get right into it. The first stock is QS. Now I'm going to bring up a chart real quick, and it's going to be LAC because that is a similar stock that has already taken off. Now I spoke about LAC probably over a week ago, and since I spoke about the stock, it's up 40%. That is why these videos are so important. Let me see if I can bring up the chart. Okay, so you'll see LAC right here. You'll see I was talking about it consolidating at this point, and then all of a sudden we had a volume spike. I told everybody we're not done yet. $24 is nothing. We will probably see $28. So again, another spike. Then you have profit taking consolidation. Generally happens for 1 or 2 days. It only lasted 1 day in this case. And then you had buying and buying. So I would like to bring up QS, QuantumScape. Now QuantumScape is a similar company, similar business. That's the 3 month. Let's pull up the 1 month. Okay, so the 1 month we saw it spike, and I've spoken about this stock before. Heavy demand here, 920, heavy demand 922, heavy demand here. Okay, spiked all the way up to $27. Now let's see what it's selling for right now, $24. So it's about 13% from those highs. Now let's see what happened. You had outflow for 7 straight trading days of outflow, which is the normal process. We see outflow, we see the chart go down. Then we see a little pop up and we get excited, and that's when we add it to our watch list. Okay, when we do that, we're looking for more consolidation to get an entry point. So as you'll see, outflow yesterday. Let me bring up the 5-day chart actually, because I entered into a position today right here when it dipped under $24, right at $24 actually. So it was under, but I entered at $24.01. I'm thinking if I pull up the 1 month chart, then I'm going to exit out maybe 10% higher. I'm looking for my options to return 100%. So when I look at the 1 day chart, now remember, when I teach about charting, you look at the 1 day chart to give you entry. So I'm watching, and now I'll be like, oh, massive dip. Okay, it happened around 10:30 a.m., which I tell you, things get the worst between 10:20 and like 11:20 a.m. A little after the market opens, maybe an hour after to 2 hours after. That's where it's most volatile. So I'm looking for 1 or 2 of my stocks to dip that are on my watch list, and I will secure entry. I chose another stock today, and I'm going to teach you about that stock and how to make profit from that stock in the latter part of the video. So before I continue, if you're enjoying this and you think you're going to make money like me, smash that like button, subscribe to the channel. I've got other videos, I've got lessons. All right, they're all here to make you money, make you more efficient at trading. All right, so let's get back to this stock. Let me just make sure it's on the screen. I've spoken before and the stock hasn't been on the screen. Okay, so here we are. I'm following this stock. Oh my God, it dipped. It's 2404. Is it done yet? No, I tell myself there's going to be another dip that'll probably be to the same or worse. So I plan my strategy. I plan to buy my options when the stock goes to $24 or a penny under. That's when my option to buy will get executed. Meaning, I look for an option that's $150 and I say when the stock drops 10 more cents, the option that I was going to pay $150 for, I will get for $135. I'll get for a 10% discount. Now it's already down from the day because it was already as high as this, and then it's down. So I'm adding on an additional 10% from what I think is the bottom. So that's a rule of mine or suggestion I make. Remember, I'm not a financial advisor, but the next time you're going to buy an option, whatever it is, I'm not telling you the position. Say you're going to pay $200. Say to yourself, Matt told me to bid 10% less. I don't care what the position is. Puts, calls, whatever stock it is, instead of bidding 200, you'll bid 180. When it gets executed, if you just buy one contract, you're going to save $20. Now, if you're going to buy 10 contracts, you just save $200. That rule or trick or trade is called a nibble. I already made a video about it. If you're interested, please check out the video. Okay, so you basically know my position. I'm in at $24. We look at the 1 month chart. I said to you it's going to $27, which is about 13% to the upside stock only. I'm looking at the 3 month chart, and it'll probably break out. Now, why do I say it's going to break out? Because if I pull up Lithium America, similar company, and we'll look at the 3 month chart. Oh, look at that. It broke out, and it broke out about 10% higher. So we'll look at the 1 year chart. Okay, it's matching its previous high. Let's look at QS. And these are where I make predictions. Oh, look, I'm talking about the stock. It's already up 16 cents. Okay, I like being profitable, but let's look at the 1 year chart. Oh my God, it was $131. Wait, LAC already matched its high. This company is off a far, far distance from its high. Let's say it doesn't go to $131. Let's say it goes to $60. Right now, the stock is at $24. If it goes to $60 for some crazy reason, we're going to crush it. Again, I'm in it for the shorter haul. I like to make profit, look for a dip, and re-enter. I'm going to show you a second stock today that I did that on this morning, and I've mentioned this stock before. So the first thing we're going to do is we'll pull up the stock. It is TTD, Trade Desk. Now here's what I'm going to show you about the stock. First thing that got me interested. Now I've been talking about this stock for a long time, but if you look at the 1 month chart with me, which is what I have up, you'll see that you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight days, 10 days of inflow, 10 days of demand. Light bulb moment. Geez, somebody really likes this stock. Yes, I was talking about this stock at $66. I wasn't in, oh, it wasn't 64. I guess I did call the bottom on this one. Okay, good job, Matt. Pat myself on the back. Thank you so much. I thought it might dip to 64. I got in at 66. I've been riding it ever since. I've got December calls. That's it. I'm in a position. I'm holding. Okay, so let me tell you how you're going to make money, though. Here's how you're going to make money. You can see the 5-day chart is bullish. So remember, the 1 month chart tells you if there's inflow and demand. It shows you the volume. The 5-day chart tells you the form the stock is in. The same way if you're watching a sports team and they've won 9 out of their last 10 games, they're in good form. Or a racer, he's won his last 4 races, good form. Boxer, he's won his last 3 fights, same thing. The 5-day chart, look at this. See it? Jump up, boom. Jump up, boom. Try and settle. And what does it do? Jumps up again. So, I mean, that's a pretty impressive chart. All right, so how are we going to make money? Great. Let's go to the 1-day chart. Here we are. You'll see at open, it was at like $79. I spoke about this stock pre-market. I said, look at that 1 month demand. Any type of dip, I would like to get in this stock. I think it's going to spike a few percent today. So that's my planning. That was my alert. Now, how do we take advantage of it? Say your option is $1.20 at close yesterday. You say to yourself, it might dip at open. I'll put in a bid for $1.15. Okay? You're having strategy. I know my entry. It's going to be $1.15. It closed at $1.20. Now you tell yourself, I think it might spike. Close to 3% it spiked. But let's say you thought it might spike 2.5% because we're not greedy. We like to take profit. So you say it's going to spike a little over 2.5%, not quite 3%, who knows. Let's say you get out over here, 2.73, still a little high. Let's say 2.5%. That's around here. Okay, that's fair. I'm not saying I called the top, but I'm saying I planned ahead. I had strategy, I had planning, I nailed my entry. I got $5 less than what I would have paid yesterday. And then when I planned ahead, I sold it for $1.75. Meaning, instead of $1.20 getting in, I got in at $1.15. I sold at $1.75, so I made 60 cents or $60 per contract. Now I paid $1.15. 60 over 115 is telling you I made over 50% on this trade. So yes, I was in, I was out, and I made 60%. Now here's the strategy. Say I went into the trade and it dipped down. I teach you guys a strategy towards that as well. I won't average down by doubling the number of my contracts until I'm 40% down. And I must make sure that I have at least 7 business days or trading days until my option contract expires. Now, I spoke about that. It's been a long time since I did a live stream, but if you look up Ask Matt episode 37, it's a very informative live stream, and I tell you, I specifically explain how to average down on options. I would love for you guys to learn. Let me know what you think in the comments section. Tell me, yeah man, that was a good video. It taught me how to average down the right way. Because if you average down the wrong way, you could potentially blow up your account. Now, I just did a video about blowing up your account, so there you go right there. But this video is about making money. So let's get right to it. Let's get back to making money. Okay, so boom, boom, boom. You know there's demand for this stock. So let's say you missed the entry this morning. You didn't make 60% like me. I tell you guys, we step and repeat. We do the same thing. Now, it doesn't mean I'm going to get in at the same $1.15 price. It means that I sold my contract for $1.75, and I say to myself, I'd like a 20% discount. So go ahead, light bulb, do the math. 20% is 35 cents. So now I'm looking to get back in at $1.40. So lo and behold, as I'm shooting this video, it dips hard. Boom. And then it dipped a little harder. And at this point, when it's right about $80, my contracts got executed. So I'm back in the same position. Understand, we plan ahead. So I said to myself, I just got out at $1.75. If I want a discount, I mean, it could have went to $2 after. It spiked a little harder. But I said to myself, I want a discount. So if it spiked to $2, great, I'll take it at $1.40. I'll take a 30% discount. Now you have 2 options. Number 1, somebody sells it to you because the stock goes down like it did. Now, even if it didn't execute right here, it would have right here. So I got my sale price, my discount. I have to end this video soon so I can actually punch my sale order. Meaning, as soon as I buy something for $140, I say to myself, I'd like to make 30%. In this case, that's $42. So already I know that I bought it for $140 per contract. I'm looking to make 30%. So you can take 140 times 1.3, and you'll know that I'm going to ask $1.82 or $182 per contract. That has my 30% profit. Again, I want to trade, and I want to teach you to trade like a computer. We don't care who buys our contract or who sells us our contract. We're looking to secure profit. We're looking to get paid, and we're looking to repeat the process. With that said, if you missed the opportunity when I started, slam that like button, give me a comment, let me know the strategy worked for you. TTD, so you could do the same thing. If you didn't get in today, you'll look for a day that there's a selling day. Let me just see if I can find it in the 5-day chart. I mean, it would have been back here, but let's say tomorrow looks like this day right here, the first day right here. The market opens up, the stock opens up, and then it dips. Now, when it dips to this point right here, you say to yourself, it's dipping. I will take my first position. You take your first position because it's risk versus reward. Say you have to average down, second position, average down, third position. We only take a quarter position. It's a safety play. It's a way to average down properly. And when you're correct, you don't need to average up because you're correct. And it feels good to be right. So call yourself a winner. Stay with me, learn from me, and let's grow together. Thank you.